Thank you for tuning in today. I'm Spencer McGowan, your financial weatherman, financialweatherman.com. You can go there and get more details about the program. What we're going to cover is a fast-paced tour of the global financial markets and the top financial stories this week, starting with the Russell 2000. That's the small stock index. Little companies on fire. Look at this, a clear uptrend, and this is year to date. That's the January high, the rebalancing correction. You can see a full recovery, and boom, a nice cup with a handle type pattern here, and the Russell 2000 making multiple new all-time highs this week, as well as the NASDAQ and the NASDAQ 100. Notice the Dow looking more like a wilted cabbage leaf here. We do have a nice rally to 25,300 at the peak this week, 25,200 on this graph. What we're seeing is an interesting downtrend here, maybe a reversal of that, but it's clearly not an uptrend for the U.S. blue chips. It's flat, but the earnings have been growing extraordinarily well, removing some of the dangers of flash crash. There's always a price danger in equity. We're going to cover in the long play program this weekend at NetWorthRadio.com strategies and why it may be dangerous to have too much in equity, as well as fixed income strategies that say what are the right parts of the bond market to be in. And when we mention fixed income, what we're also talking about is the inflation dangers to the prices of bonds. Energy is the biggest component usually in inflation. There's a direct correlation. And so looking at energy, the burnt orange, we've covered this before in the videos, the burnt orange is oil prices. Notice a steady uptrend, and we could see this week $65 a barrel after a recent high of 72. The colorful index is the pipelines. This is 5 years back. You can see $100 barrel oil, the collapse in pipeline prices. These are almost lockstep percentages. They just tend to lag pipeline pricing. Notice the capitulation sell-offs. The final capitulation we believe was here, and with cash flows in many cases above 8% for the pipeline category, energy infrastructure could be a good long-term inflation hedge. Let's take a quick look at the long-term chart. Here we've got oil prices. Look at that, $140 right here. Then the recession, that was a demand-driven collapse. Nobody wanted to buy equity, and you can see these two indexes recrossing after a dichotomy here related to the equity market correction, which began in July of 2007. Pipelines hit a 540 high here on that index. And there's the $27 a barrel oil collapse in early 16, and we've started to see what could be an uptrend there. But what I wanted to show you is longer term, these two have a historic correlation that if it proves correct going forward, the pipelines could return over a 5 to 10 year period as much as 100% appreciation. That would be a nice inflation hedge. And let's look at strategy. What we have right here is liquid natural gas exportation. Notice the absolute explosion in exports to Asia, Mexico, other parts of Latin America, Portugal, Turkey, Spain, Kuwait, Jordan, and United Arab Emirates are importing our liquefied natural gas. This is a great bargain category that relates to that energy infrastructure, this EIA report. And here we go with the ideal allocation model. Neutral when we start to build portfolios, a third growth with income, a third high cash flow, and a third safety and income. Well, this safety and income portion, the yields are relatively low, duration risk is high. We'll cover the details in the program. High cash flow, generally global lending. Think I'm going to be the bank and loan the money out in baskets with a manager that knows what they're doing. And then growth with income, that relates back to our inflation hedge category. We customize this for the condition of the markets and your situation. So come down to the Crescent, meet the team that cares, and get an updated investment plan outline for the current environment and prepare for the storms ahead, which inevitably happen in the financial markets. I'm Spencer McGowan, your financial weatherman. Thank you for joining us on YouTube. Be sure to tell your friends that this could be the best 5-minute education on the current state of the financial markets. We'll be back next week. My firm, McGowanGroup Asset Management, sponsors NetWorthRadio.com and, of course, our YouTube channel under McGowan Group. some educational disclosures and discussions that I wanted to add to the broadcast. The first is, I'm very proud of our team, including Stephen Norris, who will be added as soon as we redo the picture. He's our newest team member. Come down, meet the team that cares, get a written plan, because the securities we discuss, the financial news we discuss, that's not a recommendation until you actually come down and get a customized plan at the Crescent. You'll get a tour, and we look forward to seeing you. We're going to cover value at risk of loss in portfolios, and you can see it right here. Learn about our performance, what happened in 2008, how long did it take to recover. All of those items are posted right here at NetWorthRadio.com or the McGowanGroup.com. The other part of the program, when we look at price fluctuations in bear markets and risk control, that's a huge part of NetWorthRadio.com. We look forward to helping you advance your plan and your cash flow. Come down and meet the team that cares.